Hi everyone, hope you're all doing well. Today I thought I'd do an update on a stock that I've not talked about on the channel for a few months and see where I'm at with it, what my thoughts are. And they are reporting earnings in the next few weeks actually. But I thought I'd do a bit of a update into GAN and what my thoughts are on this current stock and where I see it going. So yeah, for you guys that have been wanting a video on GAN, I hope this video is useful. Hit that like button and we'll take a look at what's going on with this business. So GAN is one of those stocks that has just been absolutely killed in this last 12 months. Really, since the kind of peak of the market in that March, February 2021 time, this stock's been killed. It was a $27 stock. That is correct. $27 stock, and it's now down at $3. That is a massive drop off in the share price, and the stock is currently down 87% since that time frame. And since its IPO as well, it IPO'd around that May time, it was around $14. So this, even from its IPO, has had a massive decline of 75%, and that's now put the market cap at 146 million. Now today I don't want to spend too long into what the business is and what everything that GAN does. I want to kind of do a bit of an update into GAN. So yeah, if you wanted a bit more of a deep dive, this isn't going to be it. We're mostly going to look at what's recently gone on with GAN. So yeah, more of an update I would say than a deep dive. So I'll say really quickly, if you don't know, basically GAN have two incomes. One of the incomes is a B2C platform, which is Coolbet. They acquired this for a very good amount of money and it's been absolutely amazing for the business. And in fact, you can see here, it was actually the mobile operator of the year 2022. So this is a really good growth driver internationally for the business. The other part of the business is a B2B platform. So this is basically the best way I can always sum it up is if you imagine Shopify, you want to get online, you go to Shopify, they set you an online store up. GAN is very much the same for businesses that want to get into the online gaming space and want to have a presence online in the gaming space. They go to GAN, GAN set them up the platform and manage the platform for them, and they'll be like Shopify, they kind of take a bit of a commission for that. So yeah, they've got two really good spaces here, really good growth in the B2C platform and also the B2B platform, especially with the US growth, is something really interesting as well. So good diverse income, international income as well, which is really good. So I think that's really safe that they've got that operation in many countries and two different diverse incomes there, which is great. Now, one of the crazy things with GAN and with the share prices, you look at the share price and you're like, okay, if the share price has declined so much, it's one of these stocks that are struggling at the moment. There's a lot of businesses out there that are being hit by the recession worries and the impacts of the economic downturn at the moment, and you're thinking GAN's going to be one of them because you look at the share price, there's something fundamentally really wrong with this company to be losing that amount of value, and it's not. This is one of the crazy things with this company, GAN. It's done absolutely amazing. In 2021, it had an absolutely amazing year. It smashed all the numbers. It hiked up its guidance. It had a fabulous 2021. And at the moment, going into 2022, it's looking pretty strong as well. There was a slight EPS on the first quarter, which was by 1 cent, but the revenue was a massive beat, nearly over 10% beat on the revenue, which is fantastic. And that revenue grew 38% year over year. Now, the key thing is that analysts actually went into this year thinking that GAN were only going to grow 20%. And they just came out and smashed it by 38%, way ahead of expectations, even way ahead of my expectations. So this is the crazy thing. You're looking at a company like this that is bringing out these absolutely fantastic earnings, really good 2021, even stronger 2022, and the share price is getting no reward for it at all, which is just absolutely insane. It's one of those massive disconnected stock prices to financial performance that we have at the moment. And the great thing is now this company is actually still growing revenue at really good rates, and this is the year they actually start focusing on bringing that profitability back, which is going to be really exciting, because if you have a company that's growing at these sort of rates and then you start driving that profit forward as well, that's going to be absolutely amazing. And I think management team have got really fed up with how disrespected that share price is getting for the company like GAN, because what they did, which is really rare for a company like this in quite a growth stage, is they started buying back shares. So they kind of got fed up around June the 13th and went, you know what we're going to do? We're going to start buying back our own shares, because this is absolutely ridiculous, and they're buying back 5 million of shares. And this is also made from cash on hand, because actually when you look at the balance sheet, it's a pretty strong balance sheet they have as well. So when you actually look at a 5 million stock buyback program and your business is actually only worth 146 million, this is actually really a big amount of shares that are being bought back by management as well. Now, when you dig into the company, the B2B platform, they increased 17% in the last quarter, which is pretty good going. One of my big things is to make sure this carries on increasing. I'd really love that to get to the 20% range if they can. So yeah, if they can keep hiking up that B2B platform. The B2C platform, look at this, 57% increase, which is absolutely fantastic as well. And you can see the gross profit was actually quite a bit of a good jump as well in this last quarter. So yeah, everything was really impressive in the last quarter's earnings and in 2021. Really good. I'm looking forward to Q2 and seeing what numbers they pull out in Q2. Now, GAN also did a recent investor day, which was in the back end of 2021. They came out with some really key targets here. So they talked about their performance and how amazing they're doing, which we just spoke about there. They talked about a strong balance sheet, which we know is a pretty good balance sheet that they do have. They set out a 2023 revenue target of 225 million to 250 million, which is a really good growth. Now, we'll see exactly how they do it. I think personally they might fall short this target, and I've forecasted that in. But that is still really good because you think, 225 million, this company's like 146 million. You're talking nearly double the market cap of what the company is right now, which is just absolutely insane. And you can see here that they are projecting long-term margins of 30 to 35%, which is really high margins. But when you do look at the gross profit margins they do have, they are like 60-70%, so it is quite achievable. And also their longer term targets, 2026, is a revenue target of 500 to 600 million. Once again, I don't know if they'll reach that. I've personally gone for a bit of a lower target than that personally, but that would be a target growing at 35% of CAGR over the next 5 years. I think recently in the last earnings report they did say that potentially they're going to cut back on spending, so that could mean they're going to make more profit in that time, but actually the revenue target will be a little bit lower. Nevertheless, 2026, if they're coming even close to that sort of 400, 500 million, and it's at this sort of 146 million market cap, it's just insane. You start running potentially, if they start doing 30 to 35% EBITDA margins on the longer term as well, that's absolutely crazy as well. And you can just see the collapse of like the valuation and the metric expansion in this business. So you can see here when they came like on the 30th, so this was the 30th June 2020. Like total enterprise value to revenues metrics were like 17 times, and now we're down at 0.6. That's a massive contraction in their multiples. It's same on the total enterprise value to EBITDA. It was 65, it's now down at a 5. This is massive contraction in the margins or the valuation and the metrics, which is just insane. Like these metrics it's trading down at the moment is just incredibly low for this company that's doing what we just talked about there, the numbers they're doing, which are absolutely fantastic, and buying back shares. So what I thought I'd do is actually show you some of the numbers that I have on this business. So we've got ticker symbol GAN. Price is currently $3.47. It's currently market cap of 146 million with 42 million shares outstanding. Now potentially there's currently share buyback going on, 5 million share buyback going on. That would potentially put the future shares outstanding down to 37 million. So I'm going to take two things in here. I'm going to take the market cap if there's no share buybacks. I'm going to take a market cap if there's the current 5 million share back executed, which we currently know is going on at the moment. So if you say that pre-buyback, so if they don't buy any shares, the market cap is currently 146 million. After the buyback, we could potentially look at a market cap of 129 million. That's just for reference points. So I've run different numbers here. So I've put in revenue growth of 15, 20, 25%, which I think is very conservative. I think that 15%, I can't see them doing 15%. I'm obviously somewhere between this 20-25%. And that is still quite conservative in my opinion, because when you do look at these targets, they're currently aiming for a 25% CAGR over the next 5 years. So even what I'm doing here is massively conservative for the business point of view. You're talking 35% in particular on a CAGR. Mine are incredibly below that target. So even on my high side, this is very low. So we've done 2022, which looks like it could be around 159 million. Considering that the first quarter as well, which we just talked about earlier on, it was way ahead of expectations. So they should come somewhere near the guidance I would expect, even if they have a poor, back at Q2, Q3, Q4, they're released ahead already. So I think they'll somewhere be in that sort of range. So yeah, I went for 159 million this year on 2022, and then we did the compound rate of 15, 20, 25%. In 2026, this actually pulls out with 278 million, 330 million, and 388 million. Now, once again, when we look at the longer term goals, even on my high end of 388 million, if we do actually pop back to the investor day relations, their range was actually 500 to 600 million. So this is still, my high end is very conservative for what the company offered. My high end is still 120 million off the company's own projections, and on the high end is 220 million off the high end of the management projections for 2026. So you can see my forecasts are very, very conservative. And then you look at the profit margins. I've gone 8, 10, 12%. Now, the thing is like we talked about earlier, management are earning for, obviously this is EBITDA from 30 to 35%. But even so, I mean, realistically, I mean, that could put you somewhere in the high teen range, maybe even the 20% range. So even my profit margin is potentially half of what management are aiming for. So same again, I've got revenue that's very, very conservative, 120 million below expectations. I've got profit margins that are potentially half of what they potentially could be. And then we'd worked out the total earnings off them profit margins, and we stuck a 20 times earnings multiple on it because that's, what I'd say the average multiple is. Same again, 20 times multiple. Do I expect a company that's growing at these sort of rates, if they're putting this amount of profit in, really good balance sheet, potentially buying even more shares back? Very conservative once again, I think, at this sort of earnings rate. So bear that in mind, very, very conservative. And what does that leave us? Well, on the really bear side, that would give us 200% upside if they buy back the shares, 244%. And on my extreme bullish case, that gives me 538% upside to 622% upside. So that's a 5 extra in this next 5 years, which once again I think is really conservative, because I think if you were to start changing some of these numbers and the numbers were a lot higher than this, obviously that upside is even higher. And I generally do think there's a potential that I do walk away more upside than what is here. But even at these sort of conservative rates, I think that there's plenty of upside in this business right now. And right now, when you look at the company's performance, they're absolutely smashing it, and they're ahead of my expectations. And you can even see my expectations, like the what GAN's management team ambitions are just so high up from what I'm even expecting. And even with my numbers, I'm expecting really good upside. But if management team do deliver, which they do seem to be doing at the moment, that higher end guidance that they're offering, this is more than what I'm even expecting, and it'll have crazy upside. So financially performing absolutely amazing, and a very good future going forward at the moment. So yeah, obviously I'm still really bullish on GAN, and I think $3.46 is absolutely ridiculous at the moment. So bearing in mind, what's my plan with GAN? Well, obviously at the moment I think it's absolutely ridiculous to sell this business at these sort of valuations. These valuations are just insanely low. When it comes to buying with GAN, you probably notice I'm not being too active buying GAN at the moment. And why is that? When I'm looking and thinking there's a fantastic upside. So the reason why I'm potentially not buying as much GAN as what I potentially should do right now, or I haven't been buying GAN, is basically, if you imagine my portfolio, let's just say it's a pie, and let's say that GAN ends up taking this much up. So if GAN does take up this amount of my portfolio, that's a fair chunk of my portfolio. You're talking, let's make it easy. Shall we just say 25% of my portfolio? Now, when I started building GAN up, let's say it got up to that sort of amount in my portfolio. First of all, I didn't realize that Wall Street were going to be this stupid and sell this stock off to these sort of low valuations. Like, the valuations are just extremely low for a company that's performing this absolutely amazing. As you can see from what we showed earlier, it's absolutely insane. So first of all, I didn't think Wall Street were going to sell it to these low valuations. It's absolutely ridiculous. So this has kind of took me by surprise that I didn't think it would get this low. The second thing is that I've got to be careful, because I allocated my position and thought, okay, it can't go much lower than this, and it kept going lower and lower. And eventually, when it gets to a decent size in my portfolio, I have to pull the trigger and go, you know what? Even though I think it's an absolutely amazing opportunity, I've got to weigh up the risk and reward here. And if that position starts making up a good chunk of my portfolio, there's always a point where, even if I'm really bullish on the company, I have to step away and go, I can't buy it anymore. The reason why I've got to have that point where I step away from that is because, let's say, you can tell I'm ultra bullish on GAN, but there's a part of me that has to realize I could be wrong on this. You got to be really careful not get too sucked in, and you got to look at it and go, things could very quickly change in a year, 2 years, and there could be some news that changes everything, or the performance slips away, or you've just totally misjudged it. And I've got to have that point where I look at GAN and go, okay, it's actually making a good chunk of my portfolio up, and I think it's crazily undervalued, and I still really want to buy, but I've got to be careful because I could be wrong. And if I'm wrong and I have a massive allocation in my portfolio and it balls up, the problem is I lose a lot of my wealth in that, and I've got to be really careful with that when I start doing that. So that's why I've got to be really cautious, because GAN was actually starting to make a good chunk of my portfolio, and I had to just eventually go, okay, I just can't keep buying it forever and ever and ever. Now, the good thing is that I've been slowing down with buying on GAN and I've been focused on other companies. When I've been focusing on them other companies, that's mean they've taken up more of my portfolio. It's reduced my risk exposure to GAN as well, and that's given me now the potential that I can actually start actively going back in and buying GAN, which I'm probably actually going to do very soon. I'm probably actually going to start buying GAN up a little bit more now that I've kind of took my exposure down to it a little bit. But that's what I've got to be careful of, because at the end of the day is that even though I can be ultra bullish on the company, I've got to realise, like, if let's just say I buy 20 US stocks, I've got to realise that probably when I buy, as an individual stock picker, you've got to realise that I'm going to buy 20 stocks, and out of them 20 stocks, I'm probably going to get, say, like three of them stocks probably wrong. Or maybe even 4 stocks. Out of 20 stocks, I'm probably going to get 3 or 4 stocks. As long as I get the other like 16, 17 to perform very well, that's way going to make up for them errors that I'm going to make. But as an individual stock picker, you got to realise there's going to be a couple of things that you do get wrong. And you got to always protect yourself from them mistakes, and that's what exactly where I was in that situation with GAN. I'm just protecting myself. But now I have done that, and that gives me the more allocation room now to go into GAN. And that's potentially why you've seen me slow down on that. But now that I've got rid of that risk, I can actually go in and probably buy a few shares. And as you can see, I'm still very much as bullish as I ever was with GAN, and that will probably see me buying a few shares in the next few weeks and months as well. So yeah, overall, that's my stock update on GAN. I think it's performing absolutely amazing. I think the valuation is ridiculously cheap. I think the upside is absolutely amazing, and I will be buying some shares more than likely very soon in GAN. So I hope you enjoyed the little update anyway, guys. If you could hit the like button, that'd be absolutely amazing. And yeah, I'll see you in a bit.